All right, Carl, thank you very much. We'll continue to follow those headlines, of course, on news that those talks have wrapped. As we were just hearing as well, we'll hear from the Treasury Secretary coming up sometime this afternoon as well. We'll show you the market picture here. We did start out by extending those records for both the S&P and the NASDAQ. The Dow is trying to get to that point. That's where we currently stand. We do have some red across the board today. We'll trade all of that. Of course, we're anticipating mega cap earnings, the Fed decision, the jobs report, in what is an especially big week for your money. Joining me for the hour today, Josh Brown, Joe Terranova, Stephanie Link, and Kevin Simpson. If you want to use that word problem relative to the mega caps, given the fact that over the last 3 months, they've all ripped into what is now going to be their earnings prints. I mean, Alphabet was up 20% into theirs, so you didn't get a big jump on the backside of that. NVIDIA's up 61% in 3 months. Microsoft's 31%, as is Meta, and Amazon's 25%. We're going to get all of those reports this week. Not NVIDIA, of course. We're going to have to wait a little bit for that. But is that a sign of exhaustion, that you did not get a big move from Alphabet on what was a good number, on what was a beat in search, which has caused so much agita among shareholders and watchers of this whole AI trade?
You know what, Scott? I think you hit the nail on the head. And actually, the thing that's happening right now that I think is most notable is that the beats are being somewhat rewarded, but the misses or the just okays are getting absolutely hammered. Spotify is a really interesting case in point today. So is PayPal. So it's like this is the problem with having an incredible rally leading into an earnings quarter, which is exactly what's just taken place. Now it's like, all right, you had a good report, better be a good report, because if not, we're going to take away 30-40% of the gain. So if you're up 12%, you're losing 6%, or you're losing 5% right off the bat if it wasn't better than expected. So the beats are being rewarded. That's fine. They usually are. For companies beating, though, we're not talking, to Joe's point, we're not talking about huge upside. The average one-day price reaction for companies that have beaten is plus 1.1%. Not bad. That's an average. But like not amazing compared to what the downside is. And if you have a portfolio of individual stocks, that's what you're feeling right now. And actually, technology stocks that beat are seeing an average of negative 1.1% one-day reaction. A one-day reaction is not that big of a deal for most people. But I'm just adding on to what you're saying. Is that symptomatic of a market that maybe got ahead of itself? For companies missing, this is really the key. The average one-day price reaction is negative 5.2%. That is the worst that we have in our data going back to Q1 2017. These are big beatdowns. So, yes, earnings are coming in solid. 82% of companies are beating so far this quarter, but the misses are getting absolutely crushed. And I think that's really the fault of a lot of big expectations coming in. The last thing I want to say that I think is equally important is we haven't really gotten the bulk of the reports from the most tariff-exposed sectors. And that could set up another wave of these types of beatings. And I think if you're long a portfolio of names right now, you're looking at which of your names haven't reported yet that are absolutely susceptible to tariffs. You're not feeling as good as you did 2 weeks ago.
Yeah, I mean, there are two questions related to tariffs, Steph. It's one, the inflationary impact, which so far has been more talk than actual result. But there is also the economic fallout that we're just going to have to wait for. Yeah. To what Josh was talking about. Our latest CNBC Fed survey points to higher stocks with more risk. They've increased, the respondents in our survey have increased their outlook for the S&P this year and next, by the way, with less uncertainty about the tariff outlook and more confidence they'll result in only one-time price hikes. Of course, there is concern in the market, too, about stock valuations, which are on a historical basis richer than they've been. You're at 22 times plus on the S&P. That 10-year historical is 18.5. So you have stocks are expensive. The economic outlook is reasonably uncertain relative to tariffs. And now we've got some big earnings coming down the pike, too. We don't know where rate cuts are coming, and we'll get a jobs report at the end of the week as well. Makes sense of all of that.
That's a lot.
There's a lot. That's what's in front of us this week.
Ask Whirlpool and Stanley Black & Decker about tariffs. Look what they're doing today. So I think we have a good sense there.
Not good.
It's not, but that's not the whole market, Scott. Look, we're up 28.8% from the April lows. I went back and I looked at 10 years and what the average return is in August and September, because of the 2 weakest months of the year. In August, it's flat, and in September, it's down 2%. October, which has the bad reputation, it's actually up on average 2%. So, yeah, we could see volatility, especially given the run that we have had. And I think Jackson Hole might also bring out a lot of volatility. We don't know what Fed Powell is going to say at that meeting. But the economy's growing at 2.5% in the face of all these tariffs. Earnings are coming in okay. 35% have reported. You know, Josh talking about the beat rate, but I'm looking at the absolute numbers, 5% revenue growth and 8.5% earnings growth. That's not bad. And I view earnings not to be afraid of the reactions at all. If you get strong fundamentals, you're getting a chance. You're getting a look. And I bought IBM, GE. I'll buy more Boeing if it comes down even more. That's a crazy reaction. Wells Fargo fell 5%. Now it's actually above where it was when it fell. So I'm glad I bought then. I look for opportunities, especially where I'm reading and listening to the companies and the fundamentals are sound.
I hear you, but when you talk about earnings and you say, quote, that's not bad.
That's actually good.
Is it good?
8.5 of 8.
Is it good enough to justify 22.5 times? That's the key question in this market.
Okay, so financials are not trading at 22.5 times. They're trading at 12 or 13 times earnings. They're trading at 1.5 times book value. Discretionary. There's a whole ton of discretionary stocks that are cheap. I know housing is dead. I got it. But those stocks are trading at 8 times what I think is trough earnings. And then the industrials, they're not cheap. But you have this massive secular tailwind in this electrification theme that we've been talking about for 2.5 years, that if those stocks come down, you want to be all over those stocks. No, they're not cheap, but the backlogs and the book-to-bills are very, very strong, and the visibility is very, very strong. And if you can see a pullback of 5-7%, I'll be all over that too.
I mean, the Whirlpool slashes the guide. P&G says today, their CFO does, they're seeing signs of slowing spending across the product categories. We know there's going to be some impact from the tariffs. You're talking about taxes. They're taxes, okay? On somebody is paying it. You're either going to get it passed on, so the consumer's going to pay it. You're either going to have it eaten, so the margins compress. It's not like you're just going to put these tariffs on all of these countries and all these companies have to deal with that, and there's going to be no impact whatsoever.
Well, there's going to be a lot less impact than what the markets were fearing in early April. So from the standpoint of tariffs, you mentioned Procter & Gamble. They're talking about $1 billion hit next year. I mean, that's not small potatoes.
It's better than expected, though.
It's so much better than expected. Apple last quarter was talking about $900 million just for a quarter. Now, they're different. I mean, scale-wise, it's different companies. But these are far better than feared. So when you look at the Procter & Gamble number today, I was pleasantly surprised. And as a shareholder who had very tepid expectations, to everyone's point, if you miss, I mean, there is zero tolerance for a miss. And if you succeed and you beat earnings, I think it's all priced in for the most part. So when we see
on the mega caps, you do think that? You think it's all priced in because of the numbers that I said earlier?
So let's talk about Meta, Amazon, all these high expectations that we have this week, later in the month with respect to NVIDIA. I think a lot of it's built in. So I'll be surprised if they trade much better than much better than Alphabet did. But if they don't, look out, and we're going to get an opportunity. And to Stephanie's point, you look at IBM. I mean, those numbers were very, very solid. The stock sold off far below where I think it should have. And this is a buying opportunity.
The stocks had a huge run into the print. Like a lot of these did.
I think that's consistent with what we're going to see this earnings season.
And that's what takes you exactly towards what the expectations are, because exhaustion works both ways. Exhaustion, in the case of Procter & Gamble, is a company that's down 6%. You and I both know that's a quality company. Now they're saying today, okay, guess what? To your point, now we have to think about raising prices. We're going to do what Mondelez did earlier in the year. We're going to raise prices. It's going to maybe be mid-single digits, but we acknowledge we have to do it. So I think it's an example of all of the bad news is priced in. We understand what their tariff cost is, $1 billion, better than expected. There's an example of it working the other way, where you have an opportunity to buy it.
Institutional investors, by the
Hey,
way, are
guys,
selling some tech and comm services. Josh, yeah, go ahead. That's according to Bank of America's equity client flows, which at least gives you insight into positioning ahead of what is a very big week for these companies.
Yeah, look, this is one of the things that I wanted to get to, Scott, which is that until we get through the major company earnings, we've had some, but until we get through the multi-trillion-dollar market cap companies, it's really wait and see. Just in terms of like what is the overall tone going to be? Like we're talking about earnings reactions, no Microsoft, no Meta, no Amazon. No Apple, no, obviously no NVIDIA, they're a late reporter. But I think the key thing here is that companies are set up for the impact of these tariffs better than you could possibly ask for in terms of their current profit margins. Right now, in this quarter, the blended net profit margin for the S&P 500 is 12.3%. When I say blended, I mean the companies where we have actual results and then adding back in the estimated results for the companies that we haven't yet heard from. It's below last quarter's net profit margin of 12.7%, but above last year's 12.2%, and obviously way above the 5-year average of 11.8%. And to Stephanie's point, when you get a company come in with an earnings report that's good but not good enough, but the fundamentals are there and the guidance is intact, and they're going to whack that stock 7, 8, 9%. I mean, unless you're 110% invested, it's kind of what you want. You just had almost a 30% rally in the S&P, and the market had been trending to such an extent. I think like 80% of stocks were above their 50-day. Like you can't even think straight when stocks are all going up like that and trending higher, and the market doesn't let you in. So if you do this for a living, you want that opportunity. And when you talk about profit margins to this extent, like companies are going to absorb these tariffs and life will go on. Some of it will hit the consumer. Some of it the companies will eat. My best guess is what we'll end up seeing is some combination of those two, not either or. And then there'll be some sneakflation where companies basically say, look, our raw cost for this particular product is much higher now. However, we have room across our portfolio to kind of aggregate that cost that we're incurring across everything and make it feel less bad. And we'll muddle through because to Kevin's point, this is so much less bad than what we have been contemplating, even as recently as like 6 weeks ago.
Those are the words that are most important. Less bad. If the market was overly concerned about the trade war and these tariffs, you wouldn't have the S&P and the NASDAQ extending their highs every day. You would not have the Dow Jones Industrial Average within 175, 180, or whatever points from its own first new high since December. You're going to end up in a less bad scenario. Remember, as we even wait for more details from these discussions that took place in Sweden with the Chinese, the worst that was threatened from the president has not been the outcome on any case whatsoever. We're going to hear from the Treasury Secretary a little bit later. Scott Besson, of course, coming up in a CNBC exclusive. But we already know that, and that's what the market is banking on.
Yeah, but once we get through tariffs, we'll talk about the lower taxes and deregulation. And we already are seeing deregulation. Look at all the M&A that we're starting to see. Some of the IPOs we're starting to see. The financials are acting much, much better because of deregulation. They're directly impacted as well. And we are seeing better pipelines, better activity. And so I think that we just got to get through this period of the unknown. We're getting closer and closer and closer, and then we can really start focusing on the other parts of the growth agenda from this administration, which should keep growth above trend. Is it 2.5%? Is it 3%? I don't know, but inflation is coming down, and I don't think it's going to go skyrocketing back to 9%. Even if it stays here, I'm okay with that. I would much rather have better growth and a little bit more inflation, because that is the key and the recipe for better earnings growth going forward.
Yeah, like I said at the top, though, you also have to hope that if you're going to get better growth from all of the other things like taxes and deregulation, you're not going to get growth stunted by the tariffs. And we're not going to know that. Maybe they cancel each other out. Maybe the power of growth from the the tax cuts being extended and deregulation overpower whatever hit to the economy that these tariffs end up taking.
What about the revenues that we're going to get from these tariffs? That's going to help. Maybe we'll lower the deficits and the debt. We've been talking about that. We've been obsessed about that for years.
Yeah, but somebody's paying that.
So
And that
I understand,
that's the thing.
but Scott, it's not all or nothing. It's like there can be puts and takes. Nothing is ever going to be perfect. But I'm telling you that you get through this concern of tariffs and what it means and the unknown, and we'll get some numbers and we'll be able to analyze it. But at the same time, we have this other stuff that's coming.
No, I hear
that's good.
That's why the IMF today took up their global growth forecast.
Right.
In part because you've got some more clarity around the whole tariff issue.
And there are like 10 different companies that we'll talk about at some point that talked about China being better during earnings reports. Actually, the best growth that they've seen in a while. I mean, look at Nike, look at Starbucks, look at Estee Lauder, look at LVS. I mean, we're starting to see a little bit of activity there and excitement there, and those stocks act so much better.
Joseph.
So, hearing this conversation, look, I don't know that it is required. I don't know that it will help, but I still believe that the bulls have one card in their pocket for this quarter, and I think that's the rate cut in September. And I don't know that it's priced into the market yet. I think it's going to be telegraphed at some point. Maybe it's at Jackson Hole. I think you get the rate cut with global growth accelerating, and I think that is going to benefit the potential opportunity for other areas of the market where last fall it looked like they were making their move. Financials, industrials, a lot of the cyclically oriented businesses. I think that rate cut maybe reignites some of the bullish momentum that looked like it was there coming into 2025.
Well, that's why we don't expect anything to happen tomorrow at the Fed decision, but the news conference is going to be interesting because you get to hear from the chair himself on the state of affairs, on what the outlook is. I want to touch on the move that we've seen in the so-called low-quality, high-beta stocks. If you look at things like the ARK Innovation Fund, looking for its fourth positive month, best streak since August of 20, it's just an indication of the kinds of stocks that have ripped. The high-beta ETF, more volatile, obviously, the kind of stocks we're talking about, coming off the 6th week of gains. That's the longest streak in a year. High beta hit another record high today. Speaking of ARK, one of the top holdings, Roblox today, the target raised to 133 from 103, reiterated by at B of A. You own the stock, Kev?
Yeah, I love it. You know, it's not going to be a profitable scenario, but what we're talking about here is this infrastructure. That's why I love Robinhood, American Express, Roblox. They control the younger demographic. And what we're seeing here is just a company that's embracing AI, bringing in more users. And if you believe in the long-term thesis of who controls the eyeballs, you can't not have this on your playlist.
Josh, we've talked a lot about these stocks lately. I'd love to get your take in a day in which B of A, their trading desk, says you've got the green light now to press low-quality shorts, that the retail speculative bid, which is what this has been all about, this, meme stocks and the like, is now showing signs of fading, coupled with systematic short covering in being in the late innings. Are we on the cusp of a rollover here that we need to pay attention to?
You know, it depends on what your portfolio looks like, whether or not you have to pay attention to it. I think most people watching the show, even if they're professionals, but I would say most retail people over the last couple of months have probably taken a few flyers. They've probably added some lower quality stuff to their portfolio. And I hate to say this out loud, but we all know it's true, mostly for the recreational aspect of it. We got into a moment over the last couple of weeks where like guys were doing Bitcoin treasuries with publicly traded shell companies that literally had tiny floats, and you could just say, hey, look, we're going to buy ETH, we're going to buy Bitcoin, we're going to buy this, we're going to buy that. And instant reward because people just get so excited at the possibility of 10xing or 100xing an investment. And I wouldn't say that that's a death knell for the overall stock market, but it's definitely like one of the things that you want to watch for. And we got into that moment. And that's just one example of a lot of things that we've seen. We're now seeing people talking about meme stocks as a deliberate investment strategy again. It's been a while, professionals too. And even if you just look at like high beta within large cap stocks, like away from the freak show in the micro caps, SPHB which is at the S&P high beta factor ETF, is up 18% year to date. The year to date return for MSCI US high quality is only up 5%. So we know pressing high beta has been successful. The thing is about any momentum trade, whether it's commodities or stocks or anything really, is that when it ends, it really ends. And this looks like one of those moments where the people who took flyers on a lot of low quality stuff that they didn't really care that much about, they're probably saying to themselves, all right, that was fun. This game looks like it's over. And that's when those things start to roll, and they can roll really hard, depending on how low quality you've gone. So I think for the most part, most people aren't putting serious money into that part of the market, or if they are, they have a very, very quick trigger finger. So I wouldn't worry too much about it from a macro level. But yeah, if you've been someone who's been having a little bit too much fun, checking your app a little bit too often, today is not your favorite day.
I just want to mention, can we show shares of Palo Alto, please? Because we do have some movement within the cybersecurity space. There's a story moving right now from Bloomberg, I believe, is reporting that Palo Alto Networks is nearing a $20 billion deal for the cybersecurity firm CyberArk. It would be the latest move in consolidation within what has been one of the red-hot sectors of this market. Palo Alto shares, as you would usually, I think, expect, the suitor is the one who usually sees their stock decline on word of a potential deal. Josh, I'll come back to you real quick, and then we'll work it to Joe and to Steph. So be brief if you could. This just shows you where the action continues to be in many respects within the software space that's been red hot.
Yeah, it's so funny because we talked about the rumors that were on the tape last week, where the story was that Palo Alto was looking at SentinelOne. SentinelOne obviously down big because they are not the one, and it looks like it might be CyberArk. There's too many names in this space. So there's two different ETFs that track the cyber sector, Scott.
Yeah.
And they both just have too many companies. And so
Journal's
I think
got it too,
this is
by the way.
rational activity.
Sorry for interrupting you, but you see the Journal's got this as well. 20 billion apparently is what the number is. Sorry to cut you off there, Josh. Just finish up, and I want to hear from these guys too.
Yeah, I think when you talk to Fortune 500 companies, they're not looking for 10 different vendors. Most companies, even small businesses, they want one solution. They don't want patches. They don't want API connections. They want to call one company like a Palo Alto or a CrowdStrike and say, please secure our business. And so there are too many vendors, and this is super rational activity. I like to see it.
Yeah. Steph, what do you think?
Well, if it's true, their annual recurring revenue is going to skyrocket because that is the CyberArk story for the second half of this year. And everyone knows that's what you want in these companies because it's more secure, stable revenues, right? So I think it would be positive. Obviously, I'm not happy that the stock is down because I own Palo Alto, but I think what they're doing for the long run is very important. We have 4,000 companies in this space, and we're going to see massive consolidation, and the big five are going to get bigger and bigger. I've been saying it for 2 years. We're seeing it, and I applaud it because they're going to be able to offer more to their customers, which is what their customers want.
This would be an absolutely phenomenal acquisition for Palo Alto. Israel is the second leading exporter of technology in the world. They too do technology just as well as we do it here in the United States. CyberArk, Israeli-based company. The other Israeli-based company, which I own, is Checkpoint Software. Keep your eye on that one. Both CyberArk and Checkpoint have a market cap of around 20 to 25 billion.
Kev, you own it too, don't you?
Yeah, we own Palo Alto. We were talking with Josh last week about the SentinelOne possibility. I think the CyberArk is fantastic. It's going to be accretive almost immediately. There's synergy there. Do we wish Palo Alto was up today? Absolutely. Maybe it's an opportunity to buy it.
No, but I mean, as I mentioned, this is the typical move in a stock you usually see. The buyer is the one whose stock typically goes down in the knee jerk.
100%.
And then you let things settle out, and then you see how the market really assesses what the deal is going to be. So we'll follow that. A couple of headlines there regarding a potential transaction in the red-hot cybersecurity space. You see the stocks are both moving on it. Up next, a bunch of committee stocks are on the move today. Big drops in several marquee names that this committee owns. I'll tell you what they are next. All right, welcome back. We're going to talk about some committee stocks today that are falling, and fallen pretty sharply. I've got a number in front of me. We're going to start with United Health. They missed. They say their earnings are going to be worse than expected. Stephanie Link owns the stock. What do you think?
It wasn't about the quarter. It was about the guidance. 2025 at $16 was lower than kind of worst case scenario. I thought it was going to be something like $18. So that's obviously disappointing. But you have a new CEO, and I think he's kitchen sinking the numbers for this year and then the recovery into next year. But I think the realization that this is a 2026 turnaround story is the reality at this point. I had always expected 2026 to be the turn, not 2025. We already knew all this bad news. That's the reason the stock's down 40%.
They've been kitchen sinking, garbage disposaling, dishwasher.
Well, it's not been pretty, for sure. It's not been good. This is not one of the reports where I say it's a buying opportunity right today. I do think for the long term, but you have to have a 2-year time horizon at this point.
Wait.
But you have a CEO who is a new CEO who's proven, who was behind Optum and the success of Optum for 10 years as this company. He left. He's the executive chairman. New guy comes in, was a disaster. Now he's back, and it's just going to take time. They got to reprice Medicare Advantage. That's the whole key, and that happens next year.
You say it's not a buying opportunity today, but you had been buying when the stock had pulled back on other news. So what's the difference between then and now?
Well, I just think that it's going to take a little more time, and I'll look for better opportunities, or maybe this is the opportunity, Scott. I don't know, but there's no rush is my point, because you have a CEO who is being extremely conservative, rightfully so. But it's going to at least take another quarter or two for that to prove itself out.
Okay, show me Merck, please, because they missed. They planned $3 billion in cost cuts by the end of 27. They narrowed their full-year outlook. The stock is down 3 1/3%. Kevin Simpson owns the name. Do talk to me.
Also not as bad as feared. I mean, this could have been far worse. We rotated out of United Healthcare into Merck. So this is our name, along with Amgen in the healthcare space. I love the proactivity of the $3 billion in price cuts or savings or whatever you want to call it, because we know what's going to happen with Keytruda and the patent cliff in 2028. They were up 9% still on Keytruda this quarter, but they're not relying on it. They've made acquisitions. They're doing cost cutting. There's other sectors that I think make this a long-term buy for us. But again, I would not be running into this name just on this earnings report today by any means.
Show me Royal Caribbean, please, because that stock was lower as well. Joe, they beat, the revs miss. You own the name, which is down about 5%. What's going on?
Wasn't perfect, and it needed to be perfect. Just to kind of highlight how much this has appreciated. The stock right now is 11% above its 50-day moving average. That is a lot of room for it to fall. It's had a dramatic recovery in terms of its balance sheet. It's improved remarkably. But when you guide lower, that is not perfection. And what is required right now for some of these stocks that are momentum-oriented is perfection.
What about Spotify? They forecast their profit below estimates.
All right, so first I'll begin my remarks by saying the stock probably will fall further. The reason that it will probably fall further is because it is owned. It is overweight in terms of positioning. The bullish sentiment is there. However, when you look at the fundamentals of what this quarter was, this was actually a good quarter. The challenge was they had higher expenses related to employee compensation. That's short-term oriented. You want to look at premium subscribers and monthly active users. In each one of those instances, there was growth. The guide for each one of those suggests that there will be further growth in the future. There's also now the suggestion that they are going to try and somewhat compete with YouTube. They're going to deliver more videos. So this is a company that fundamentally, I think, has multiple tailwinds. That doesn't mean the stock can't fall further because of how aggressively it's owned right now. But I think the long-term vision is what's required here on this stock, because at some point, 12 months from now, you'll certainly be rewarded.
All right, we'll get that Eastern. Josh Brown, you have a final trade you want to give me, please?
I think Spotify's getting overdone. I may enter, no position yet, but this is too much.
Okay, keep an eye on that stock, which is getting hammered today, down near 12%. Kevin Simpson, what you got?
IBM, it's down post earnings. They raised full-year free cash flow, reaffirmed revenue, reasonable multiple, and almost a 4% dividend.
All right, the Linkster.
Vertiv, electrification, that's the theme I continue to like in industrials. Are taking market share. They're outgrowing the market by 3 to 5%. I think you're going to get a great quarter from this company. On any weird action, you buy it.
Joe T.
Joe T. ETF holds 4 REITs. One of them, Welltower, reported this morning excellent earnings. This is a company that focuses on senior housing and acute care, with presence in Canada, the United Kingdom, and the U.S.
All right, we got a stacked deck at 3. Adam Parker, Marco Cotta, Rich Saperstein, Malcolm Etheridge, and Brian Levitt. We'll see what this market does as we await more news from Stockholm.
Hey, I'm George. This is Blue Cloud Trading. It is Tuesday, July 29th. It's after the close. And guys, in this video, we're going to go over many of the stocks that they talked about on the halftime report earlier today. So over here on the left-hand side, I created a list of the stocks that Josh Brown and guests discussed. Now, I'm only taking 18 of those stocks, not the whole list. Some of these stocks might be in my portfolio. And if you become a member, you can find out exactly what stocks are in my portfolio. So consider that. There'll be some information at the end of this video. But let's first take a look at, here's what we're going to do. We're going to cover the SPY, the QQQ, the Dow, the Russell, and then we'll look at those 18 stocks plus some of the Mag 7 stocks in this video. First, I'd like to check out something really important. Okay, so we're going to start off with the Dow Jones. You can see it was down 0.46%. Here was the prior day's closing price. So it opened up slightly above it, dropped, came back down, creating a lower high here, and basically now just kind of stabilizing around this area, down these lows that you see right here. NASDAQ gapped up in the morning and then started dropping and stayed at these levels. It was down 0.38%. The S&P 500 gapped up also and then dropped. It was down 0.30% for the day. These are not big drops. Russell 2000 was down the most. It was down 0.64. Okay, so that one also gapped up, dropped further, and just kind of stabilized towards the end of the day. Let's take a look at the heat map. By the way, I am outside, so you might hear some noise, maybe some wind, maybe some seagulls, possibly, maybe some people. It's all good. But anyway, let's take a look at the heat map here. What you're seeing right here is utilities performing quite well today. Real estate did well. Energy stocks did really well today. And Google was up, but Meta was down. NVIDIA was down. A lot of the financial stocks were down, including Berkshire here. Apple and Amazon and Tesla were also down. But the consumer defensive stocks are starting to strengthen up a little bit here. And industrials were very mixed. So let's look at that under the groups here, and we can see the performance per day. And here it is: real estate, energy, utilities, the top 3 performers. And then the top, the least, the one down the most was healthcare, down 1.2% for the day. All right, let's get into the stocks now. Okay, so we're starting off here with the S&P 500, the SPY ETF. It was down 0.26%. Folks, we are still in a strong uptrend. Price is holding up above the 9 period, the Tenkan. As far as I'm concerned, at this point, there's still nothing to be overly concerned about, except, of course, for August 1st, right? Tariff day. We'll see what happens then. But at least for today, we still held up above the Tenkan. Let's take a look at the QQQ ETF, also very strong, down 0.15%, holding up above that Tenkan. And how's the weekly chart looking on the QQQ? Here it is, okay? So we've got kind of a very negative type candle that's slowly starting to form. It kind of looks a little bit like a gravestone type candle, but remember, this is a weekly chart. These are weekly candles. We still have to wait until Friday for this to materialize. We don't know exactly what's happening yet. Overall, on the weekly chart, the Qs are still in a very strong uptrend as well. Okay, let's get to the Dow Jones here. DIA ETF held up right above that 9 period moving average. Okay, so that's positive. It was down 0.41. Russell 2000, on the other hand, okay, closed under the 9 period. Now, should you be overly concerned? I don't know. It happened back here as well, and then found support at the next level of support, the 200-day and the Kijinsen, which is the 26 period. So it could certainly pull back a little bit further. Let's see, if we measure it down to the next level of support, it's about almost 2.5% away from the next level of support. Here's the VIX, up a little bit today, 6.32%. So that's interesting that it went from yesterday. Let's see, what was the level yesterday? It was at 1503, and now it's at 1598. So we'll see what happens here. With this is, of course, is the volatility index. FEZ Eurostox is holding up above the Kijunsen, but inside the cloud for a second day. That's the Eurostox, up 0.24%. One of the few index type ETFs here. I mean, this is an ETF for 50 top Euro stocks, but a good representation. IBIT down 0.58%, closed under the Tenkan-sen, the 9 period. Found resistance once again at that trend line. So I would not be adding any new positions based on this little, what you're seeing right here. It's not giving you a buy signal by any means. Now we'll get into the rest of these stocks here. I kind of went through them. I just wanted to briefly review them before doing a quick analysis for you guys so that I could identify the strongest in the bunch of 18. And it's the ones that you have flagged here with a blue little flag here. So technically very sound on both the weekly and the daily chart. Doesn't mean that these are necessarily stocks you want to purchase right now. I'm just saying that from a technical perspective, you're going to find them to be quite strong. Here's LVS, for example, Las Vegas Sands. And if we look at the weekly chart, it's above the Ichimoku cloud, above the moving averages here, which is everything you want to see. And on the daily chart, very strong uptrend. How about Cyber Arc Software, CYBR? This was up 13.47%. You can see it broke through the 2 moving averages, broke through these prior highs here of around $410, and it's taking off. It's at 434.48. That's the daily. Here's the weekly chart, also very strong, hitting new highs. CyberArk. SPHB is the Invesco S&P 500 high beta portfolio. Here it is in the weekly. Starting to show a little bit of weakness right there. Not a lot of movement this week so far. Here's the daily chart. Okay, pulled back 0.67%. Nothing major. Still very strong uptrend. Okay. ARC Innovation. This one today was down 2.73%. And the last time that it was under the 9 period moving average was back here in June, on June 5th. So it could be short-lived, but it could certainly also, remember, everything starts with price getting under the 9 period. That's going to be your first break of a level of support. There's your second one, and that's a little bit kind of a distance to the next one. So as long as it holds up above Kijunsen, I think that you're good with ARC. Here's the weekly chart on this one here. You can see it's kind of pulling back. It's probably going to, to the next level of support, it's about 9.9%, basically. MDLZ, Mondelez International Inc., which is consumer defensive sector confectioners. Here it is on the weekly. Here it is on the daily. Both very strong trends. Vertiv Holdings creating a spinning top, which is a reversal candle. And if you're not familiar with that one, just real quick here. There it is, the bearish spinning top. And in the end of this video, you can find out how to get this cheat sheet for free. So definitely stick around for that. All right, XLI Industrials is looking pretty strong still. I like what I'm seeing here on the daily and weekly. XLF Financials stalling right there at that 52.63 level. Here's the daily chart. Pulled back a little, down 0.51%, but still strong uptrend. So same thing with WFC. This one also pulled back a little, 0.51%, but holding up above the Tenkan-sen and Kijunsen. Let's see. PG is Procter & Gamble. This one's in a downtrend right now. It's down 0.32%. Here it is on the weekly chart. Okay. It's under the Ichimoku cloud, but finding support right at that 200-day. If it breaks through that 200-day on the weekly chart, this is going to be, not a very, obviously it's had a pullback quite a bit already, but from the break under the cloud here, it's about 3% from that level. Okay, let's go to the next one. Nike. Here it is on the weekly chart. It's inside the cloud. Again, the rules of Ichimoku is you only want to add positions when price is above the Ichimoku cloud. That's very important. On the daily chart, we are above, but if you don't have confirmation on both time frames, I wouldn't recommend taking that trade. So you're taking a higher risk type trade. Spotify down 11.55%. They brought that up on the show. Josh Brown's thinking about buying this. I don't think this is the best time to be buying, obviously, because now there's weakness after this long uptrend here, and if it breaks through the cloud here on the daily, then we start seeing it looks like it's gonna, it got under the Kijunsen. Will it close under that on the weekly chart on Friday? I don't know, but that could lead to the next level of support, which is about 18% away from where we currently are. RBLX has pulled back a little on the weekly chart. Here it is on the daily, under the Tenkan. PANW under the moving averages right now and inside the cloud, so no on that one. UNH, obviously it's in a very strong downtrend, and as I said before, you don't want to be adding in these locations here. This is not an ideal place because you don't know how much further this drop is going to be. It's already down from the highs here about 58.66%. So unless you can predict the future. Now, Merck on the daily chart starting to show some strength here because it had this nice bullish candle. It actually got under the cloud, and then the buyers stepped in and pushed it right back above. So that's very bullish right there, the hammer type candle. On the weekly chart, it's still under the cloud, so no on that. I would not add positions here. IBM on the weekly chart looks okay because it's in between the Tenkan and Kijunsen, but ideally you want that price to be above all the moving averages, which we don't have here. And on the daily chart, it's still inside the cloud. So no on IBM. And what about Whirlpool? Here's another one that dropped 13.43%. We started seeing weakness right there on that first candle that dropped under the Tenkan, the 9-period moving average. It dropped, came back up. Then look at price. Where does it find resistance? Right at that Tenkan, Kijunsen, and 200-day moving average. So it's important to use these are very well respected levels that are also basically this particular indicator is used by many financial institutions. If you look up Ichimoku indicator, you can find out a lot more interesting facts about it, about how old it is. Incepted in the late 1930s, published in the late 1960s in Japan. It's got an interesting history. Anyway, let's look at Tesla. Here it is on the daily chart, under this trend line still. Nothing to do here with Tesla. Here it is on the weekly, inside the cloud. No on Tesla. Apple, under the cloud right there. There's price. Okay, so no on the weekly, and it's under the Tenkan there on the daily. So no on Apple. Meta, as you can see here in the daily chart, under the 2 moving averages. We also had a recent negative crossover, which is when you have the green line crossing under the red line. Okay, where over here it was bullish, over here it's bearish, and we don't know how much, how long that will last. So I would not recommend adding positions of Meta here. There's the weekly chart. Weekly doesn't look terrible, but it's also hitting its head right at that top of 740.91. So you can see that we might potentially, I'm not saying it's going to definitely happen, but theoretically, we could see this build into a double top. Okay, here's the first top, right? It could certainly do that, and if it breaks under these lows of 495.22 or so, expect it to drop a lot more. But for the time being, it's still stable. It's stabilizing above the moving averages, so that's good. It's almost building like a little triangle that you see right there. So let's hope that that turns into a nice pennant type pattern that breaks above and then continues moving up. And that's going to do it for this video. Stay tuned now for a little recording about how you can become a member if you're interested in that, how to get access to this software and get a $25 coupon if you're interested in using TC2000 like I do here. Add all your stocks, check on them daily, weekly, whatever your thing is, and or hourly. You can do that. Remember, we can go down to the 1 minute time frame. Here's the 1 minute of Meta. Okay, towards the end of the day. Very interesting. Look at that drop. So does that look like a pretty sight? Does that look like the ideal time to get in? For some people, it is. They think that they're buying it at a much cheaper price, and yes, they might be, but this is not an ideal entry point. Okay, ideally, you want to wait for price to break through those clouds. And you see the moves that can occur. All right. Anyway, guys, that's going to do it. Have a great rest of the day and stay tuned for this video. If you guys want to have access to this candle cheat sheet, as well as the patterns cheat sheet, this one here that has multiple patterns in here, you can get it for free on my X page right here, Blue Cloud Trading. You'll find me under the handle on Twitter of @BlueCloudTrader. All right. And then what you need to do is, once you're on the page here, go to the highlights tab here, and then just scroll down a little bit. And that's where you'll find it right here and there. Okay. So that's how you can find it. And if you guys like the, the videos that I'm producing here on the channel and you want to support the channel, one of the things that you can also do is when you're on the home page here, you can click on the subscribe button. All right. And then once you've subscribed, a new little thing will pop up. It will say the plus button. So then you can also subscribe to join as a member as well, if you choose to. And you can become a Blue Cloud supporter, and you can request a stock to be, or ETF to be analyzed on the show. Blue Cloud Trader, this is where you get access to the exclusive member-only videos that I produce. And I go over my entire portfolio. I go over the strongest stocks. And I actually provide 20 stock ideas for the upcoming week, every weekend. And that's really important because we're looking at the best stocks that have excellent technicals on the weekly and daily time frames. And then if you want daily updates on my trades, Blue Cloud Trade, I do a post every day. And let's see, daily trade updates. There it is. Okay. There's also some day trading videos. You become a Blue Cloud Legend level member. So there's 3 tiers. You can choose which one you're interested in. And basically, once you've become a member, there'll be a new tab that pops up right next to the posts. It will look like this, membership. You click on that, and you can access those posts. If you scroll down further, that's where you can find the member-only videos on my homepage. Real easy. Okay, let's get back.